Hey, good morning, folks. The markets are open now. It's currently about 10:15 New York time, and the big story yesterday was the movement in the bond markets. And we can see it here in the chart of the 10-year note. That is a 7.8% move in one day. This is the daily time frame we're looking at. So 7.8% move in one day. And then here we are. Oh my. So we've gapped up over an obvious resistance level, which is the median line of this shift pitchfork. And so gapped up over that level on the open. Currently we got a doji candlestick. And so whenever we see a doji candlestick in the markets, one of the things that we can assume is going on is that we have a high energy battle between buyers and sellers. You know, buyers are trying to push them higher, sellers are trying to push the market lower. And so we've got this battle playing out, and that's why we end up with doji candlesticks. That's what we're looking at right there is the doji. Now, so one of the risks is in Japanese candlesticks that if we get a subsequent price lower, you know, price does this today and then goes lower, well, now we've left an island top, or in Japanese candlestick terms, that would be an evening star, I believe. Price heads lower, and then in hindsight, we're looking at that as a peak. Well, you know, maybe not. We'll see how that goes. Notice that energy is very elevated based on stochastics and still rising. It's not like energy has been elevated for a long time and, hey, maybe it's time for it to roll over. No, energy is still rising up into the elevated range. If we look at MACD, we can see that both indicator lines are above the zero level. Primary trend is up. Bull mode in MACD, that's how I look at this indicator. And so anyway, that was the big move yesterday, was the bonds, 7.8% jump. The move is continuing this morning. It's still early. We'll see what's going on. And seeing this morning, it kind of sparked an idea in my mind, and so I'm playing with this. I'm thinking that I will do a separate video where I will talk about risk on, risk off bonds and some of the global events currently going on. So, but I'm not going to go into that. This is going to be quick because the markets are already open. Let's back up. Here's gold in the daily time frame, and you know, yesterday we had weakness. Gold and the precious metals, you know, they tend to head lower when interest rates are going up. It's from a investment or trading perspective. Why would I let my money sit in precious metals which pay no interest if I can get some interest over here in bonds? And so, you know, not surprising that we saw weakness in the metals on a day when the 10-year note made a 7.8% move higher. And notice that even with that weakness in the metals, our close was at 1801. So even with that weakness in the metal, our close yesterday in gold was above the 200-day moving average. That's what we got in the blue line there. And also above the psychologically significant and round number significant $1,800 level. So close at 1801 yesterday. And we can see today that we're getting a little bit of some strength on the open this morning. MACD still in a buy mode and in bull mode. Primary trend is up. Energy is elevated. So silver 23. I don't know. What do you say about silver? It's suppressed until it isn't. So, and I believe I'll see that in my lifetime. Famous last words of a bull, right? Here we are looking at the mining stocks in the daily time frame. GDXJ, it's not doing anything. It's going to hang out waiting for the metals to make a decisive move. But notice that energy is very elevated and, you know, looking good there. MACD is rising. We're on a buy signal in MACD. One of the things we have to stay aware of as traders and investors is that as markets make downward moves, they establish support and resistance levels, or they reinforce support and resistance levels. And then as price tries to rally back higher, what used to be support has become resistance. And so, unfortunately for us as mining stock investors, all of this stuff represents overhead resistance that we will have to work through, or the mining stocks will have to work through in our favor. When the physical metals make a decisive price move, the mining stocks tend to move quite rapidly. So, and of course, that's what my bullish bias, that's what I'm expecting to see now, is that we're going to get a decisive move in the metals, and the stocks will follow. Yeah, I looked at Bitcoin yesterday, nothing exciting going on there. Yeah. In the dollar today, we've got, let's see, yes, this is the daily time frame in the US dollar, potentially a doji. I don't really want to go, we don't want to make too many assumptions about what's going on in the dollar on any given day based on this single chart. So I'm not going to do so. This looks like a sideways consolidation. Obviously, the dollar tested and found support at the 50-day moving average. We can see a strong bounce there yesterday off of that level, and recognize also that this move in the dollar didn't happen in a vacuum. It happened while the 10-year note was doing that. Interest rates are trying to head higher. And certainly that's what we're seeing yesterday and today. Those indicators, both MACD and stochastics, speak to me indicating or suggesting that higher markets or higher levels are coming. And so, it's interesting. When I look for explanations, I'm an engineer. I like to understand why things occur. And so when I try to explain to myself, why did we get that almost 8% move in the 10-year note yesterday? Well, I see that, isn't this interesting? Evergrande, this is the Chinese property developer, their stock shares were suspended in trading. So, for whatever reason, well, I don't know, for whatever reason. Anyway, their shares were suspended from trading, and on Monday, yesterday, they were ordered to demolish 39 buildings within 10 days. Because of building permits. There are probably other reasons that we can go into, but now's not the time. There are questions about the viability of construction that may have occurred in Chinese real estate development. So tearing down 39 buildings, yeah, we can say it's because of illegal permits. We might also say that it's because those buildings were so flimsy that they could never be used. But again, that's another story. Let's see, equity markets. And again, the markets are open, folks. Another gap higher. And so, this kind of action in the equity markets doesn't jive with this kind of action. And so clearly there is something else going on today. The Chinese real estate developer Evergrande has it's $300 billion worth of debt obligations that are acknowledged. And one of the things that's coming out in the bond debacle in China is that a lot of these real estate developers have debt obligations that are not on the books. And so anyway, the equity market action do not jive with the bond market actions at this point, folks. And so here we see again, this is the Dow in the daily time frame. We've got a 0.8% jump, clearly a gap higher into a new level of trading, which again doesn't jive with action in the bond markets. So Nasdaq's flat. The tech stocks tend to be more reactive to interest rates. And so that's probably, or could be, what we're seeing here is that the, hot money is hesitant to move into the Nasdaq based on what's happening in the bond market. So, and I'm going to cut it off there, folks. Have a fantastic day. Enjoy the rest of the market trading, and I will talk to you soon.